Welcome to the deep dive. We're going to help you cut through the noise today and really get to the heart of what's happening out there in the market. So we're diving deep into a fresh report from Market Deep Dive today. Think of it kind of like our little Wall Street Insider cheat sheet, but, without all that stuffy jargon. And it's December 6th, 2024. And let me tell you, things are getting a little spicy out there.
Yeah, the market's definitely giving us a lot to think about today. We've got the S&P 500 kind of flirting with these new highs. Bitcoin's gone crazy. It's like rocketed through that $100,000 ceiling. And then airlines, those stocks are going crazy.
Really?
But some people are like selling after the Bitcoin thing.
Huh. Interesting.
Yeah, so it's kind of confusing.
It is. I mean, there's so much optimism out there. People are pouring money into the market. S&P 500 hit a new high today, even though the overall market dipped a bit.
So good and bad at the same time.
Kinda, yeah. ETF inflows, that's a 3-year high.
Yeah.
And people have the most stock exposure since, 2021.
So everyone's feeling good, but
Mhm.
maybe too good.
Yeah, that's the thing. When everyone's so bullish, what happens if something goes wrong? Even a little thing.
Like everyone freaks out.
Exactly. Imagine a crowded room and someone yells, "Fire!" Even if there's no fire, people panic.
So what, we should all sell our stocks now?
No, not like that. Just be smart. Look at your portfolio, see if you're okay with the risk. Maybe spread things out a bit if you're all in on one thing.
Good advice. Okay, let's talk Bitcoin. It's over $100,000 now. Is this a bubble or something?
It's more than just the price. It's how people are changing, their risk appetite. They want different assets. They're okay with things being volatile. Maybe they don't trust the old ways so much anymore.
But, okay, here's what I don't get. Bitcoin goes up, great. But then Coinbase and MicroStrategy, those stocks went down.
Yeah, it's like you hear about this amazing new restaurant. Everyone's excited. They rush to go on opening night. But then you eat, and it's over. You move on to the next thing.
So the hype was better than the actual thing.
Kinda, yeah. Sometimes the anticipation is more powerful than the event itself.
Huh, good to know. Okay, let's switch gears. Airlines. Those stocks are doing great. American Airlines up almost 17%. Why?
People want to travel again. They're booking flights, planning vacations. It shows they're confident about the economy, about their own money.
So maybe instead of worrying about stocks, we should be booking a trip.
Maybe. But listen, even with all this good stuff, not everything's perfect. The S&P 500 is high, yeah, but the market breadth, that's shrinking.
Market breadth, what's that?
Imagine a big party. Everyone's supposed to be having fun, but only a few people are actually dancing. The rest are just standing around.
Awkward.
Yeah, exactly. So in the market, it means only a few stocks are really pushing things higher, not as much broad strength.
Okay, so it's like a fancy house, but maybe there are termites in the basement.
Exactly. Something to keep an eye on. And then there's this thing called the Relative Strength Index, or RSI. For the S&P 500, it's like a warning signal.
A warning signal. Uh-oh. What does it mean? Like, is something bad going to happen?
The RSI, it kind of tells you if the market is, overheating. It was over 70 earlier, which is a sign it could be overbought.
Overbought. Like a car engine that needs to cool down.
Perfect analogy. It means a correction might be coming. Prices could drop for a bit.
Oh, so is that definitely going to happen?
Not necessarily. It's retreated a bit since then. Maybe investors are waiting to see what happens with this jobs report.
Yeah, back to that. Like the big finale everyone's waiting for.
Yeah.
But no one knows what's going to happen. Some people say 150,000 new jobs. Some say 280,000. Huge difference.
Right, and that's why everyone's nervous, like flipping a coin and waiting to see if it's heads or tails.
So what should we even expect? What are we looking for beyond just that number, the number of new jobs?
It's not just the number, though, right? Gotta look deeper, see what's really going on.
Okay, so what are we, detectives now? What clues are we looking for in this report?
Wages. Always gotta watch wages. If they're going up fast, that means the job market's hot, which is good. But it can also mean prices are gonna go up, too. Inflation,
So it's good for workers, but bad for, everyone, if things get too expensive.
Exactly. It's a balance. The Fed, they got to keep things steady. They don't want inflation too high, but they also don't want everyone unemployed.
So if wages jump up a lot, the Fed might, raise interest rates.
Could happen, yeah. Try to slow things down a bit.
And that's usually not great for the stock market, right? Like my investments.
Yeah. Borrowing gets more expensive for companies, can hurt their profits. So investors get nervous, maybe sell some stocks.
Okay, so wages, big deal. What else matters in this report?
Unemployment, of course. If it's going down, that's usually good. But Got to be careful. Why is it going down? Are people actually finding jobs or just giving up looking?
Yeah, numbers can be tricky like that. You got to know the whole story. What about, like, what kind of jobs are being created?
Super important. A good economy, it's got jobs everywhere, all kinds of industries. But if it's all just like low-paying service jobs, that might mean something's wrong underneath.
We want good jobs, jobs that pay well, help the economy grow for real.
Right. And remember, we were talking airlines. This report, it can tell us more about that whole consumer sector, not just airlines, but stores, restaurants, all that.
So, like, if there are lots of new jobs in restaurants and hotels, that means people are going out, spending money.
Exactly. Supports the idea that that sector's doing well. But hey, even if all that looks good, don't forget the market breadth thing. That's still a concern.
Right, like that cough that just won't go away. Even if you feel better, it's still there.
Yeah.
So what are the experts saying about this report? Anyone have a good guess?
It's all over the place. Some think it'll be great, bounce back from last month, which had those hurricanes and strikes messing things up. Others are more cautious. They think maybe the economy's slowing down a bit.
Talk about suspense. Okay, let's play pretend. What if the report is amazing? Jobs galore, wages up, unemployment down. What happens then?
Probably the stock market jumps up. Everyone gets excited, thinks the economy's strong.
Party time on Wall Street.
Maybe. But here's the thing. The market, it's always thinking ahead. It's already guessing what might happen. So even good news, maybe it was already expecting that.
Huh, so even good news might not be that exciting. What about the opposite? What if the report is bad? Like, not enough jobs, wages flat, unemployment up.
Oof. Yeah, then people get scared. Sell stocks, try to protect their money. It would mean the economy might be in trouble, which could hurt company profits, stock prices, all that.
That uh-oh moment when you realize things aren't as good as you thought.
Yeah.
But a bad report, it doesn't mean everything's going to fall apart, right?
Nope, the economy goes up and down. That's normal.
Yeah.
The trick is to stay calm, think long term, not freak out over every little bump.
Speaking of staying informed, what else is coming out this week that we should be watching?
We got consumer sentiment data. That tells us how people are feeling about the economy, their own money situation. And we got the weekly jobless claims, which gives us a real-time look at the job market.
Like putting together a puzzle, all these little pieces. Each one gives us more info about the economy. But with so much going on, it's easy to get lost, right?
Yeah, for sure.
Yeah.
That's why you got to focus on the big picture. Don't get caught up in every little up and down. The market's always going to do that. Just have a plan, stick to it, and don't panic.
Okay, so we've talked about a lot. The jobs report, Bitcoin going crazy, airlines doing well, and not to freak out even though things are a bit uncertain. But like, what does all this mean for, regular people, our listeners?
Right, good point. It's easy to get lost in all the Wall Street stuff. But the real question is, how does this affect like your money, your decisions?
Yeah, exactly. So like, what are we supposed to do? Sell everything, hide cash under the mattress?
No. Panic is the worst thing you can do when it comes to money. Remember, the market goes up, it goes down. That's normal. It's about having a plan and sticking to it.
Easier said than done when your investments are going up and down like crazy. Any practical tips, things people can actually do?
Diversification. Don't put all your eggs in one basket, right? Stocks, bonds, real estate, a little bit of everything. That way, if one thing goes bad, you're not like totally wiped out.
So not all in on Bitcoin, even though it seems exciting.
Exactly. And remember, investing is a long game. Think years, not days. Build a solid portfolio, something you're comfortable with, and just ride out the bumps.
Good advice. But like, let's be honest, this jobs report, it's going to cause some craziness no matter what the numbers are. How do people like mentally prepare for that?
Honestly, it's all about expectations. Don't get too excited if the market goes way up, and don't freak out if it dips. Remember, the market is always trying to guess the future. It's already priced in a lot of what might happen.
So even if the jobs report is fantastic, maybe the market won't react much because it was already expecting good news.
Exactly. And the opposite is true too. If the report is bad, maybe it won't be a total disaster because some of that bad news was already baked in.
Okay, so maybe just take a deep breath, wait a bit, and then see what's actually happening.
Yep. Don't make any big moves based on just one piece of information. Look at the whole picture, your own situation, and then adjust your plan if you need to.
And speaking of the whole picture, that shrinking market breadth we talked about, that's still kind of worrying, right?
Yeah, definitely something to keep an eye on. It could mean there's some weakness under the surface, like the rally is being driven by just a few stocks, not the whole market.
So it's like that party where only a few people are dancing and everyone else is just like awkwardly standing around.
Yeah, exactly. Not a good sign for the long term. If the party's going to keep going, we need more people on the dance floor, more stocks participating in the rally.
And if that doesn't happen, what's the worst case scenario?
Could be a correction. That's when the market drops, usually by like 10% or more. They can happen fast, and they can be a bit scary.
So it's like the market's hangover after a big party.
Uh-huh. Yeah, kinda. A time to slow down, reassess things.
Well, sounds like the next few days are going to be interesting.
Definitely. But even with all the uncertainty, there's always opportunity. The key is to stay informed, make smart choices, and focus on the long game.
Great advice. So to everyone listening, as we wait for this jobs report tomorrow, remember, knowledge is power. The more you understand what's going on, the better you can handle whatever the market throws at you. Thanks for joining us for this deep dive, and be sure to check back soon for more insights and analysis. Until then, happy investing.